Final call to everyone who's still out there, kindly come in and settle down. We're starting right now. This next session is going to be about the impact of Islamic finance on carbon markets. And without any further ado, let me call upon the moderator, my friend Nasir Altekar. Thank you so much for making time, General Manager of Trade and Business Development at ITFC. A round of applause for him as he comes up. Thank you very much. Next is Lisa Wilson, Chief Product Officer, XTCC, Bedford Rao Capital. Round of applause for her as she comes up. Thank you very much. Luma Al-Sakaf. Luma Al-Sakaf is the CEO, Agile Sustainability Consulting, LLC. A round of applause for her as she comes up. Mohammed Nazim Nordali is the next. He's the COO, ITFC. A round of applause for him as he comes up. Thank you very much. Nasser, over to you.
Thank you, Trevor. And in fact, thank you for the PIF and VCM and S&P Global for hosting this event and for allowing us and inviting us to speak. This will be a very interesting session where we would like to explore the intersection of two important sectors and two important industries. One is the carbon credit trading industry that is ever more important now, specifically with what's happening in climate change and offering the individuals and corporate an easy access to help support mitigation of carbon emissions. It is estimated that the current value of carbon credit market is little less than $1 trillion in 2022. And this is expected to reach $2.7 trillion in 2028 with a compounded annual growth rate of almost 19%. On the other hand, Islamic finance industry is a huge and growing and promising industry with its assets currently standing at 2.2 trillion and forecasting to more than double to almost 5 trillion by 2025. So we brought here an esteemed panel of experts from 3 different industries, from the multilateral developmental financial institutions, from the sustainability consulting, as well as from the carbon credit trading to explore the fusion and the synergy between these 2 industries. So we'll start off with Nazim Nordali. Nazim, you are in charge of curating all the trade finance and trade development solutions in ITFC. Can you please let us know how can Islamic finance and Islamic trade finance specifically and the principles of which that are rooted in ethical and Sharia compliant guidelines can be leveraged to support environmentally responsible investments within the carbon markets?
Thank you, Nasser. I just want to first to thank the organizers for having me here today to be able to talk about one very passionate sector in our Islamic finance for me. First of all, when we talk about the carbon market and Islamic finance, a lot of people believe that these are 2 different or 2 different aspects or concepts. I would say that if we start with us, ITFC, which is the International Islamic Trade Finance Corporation, a multilateral based in Saudi, part of the Islamic Development Group, we, like any other multilateral, we talk about development, all right? So this is our mandate, to development for our community, our countries. In the past, we always talk about socio-economic development of member countries and the communities that we serve to serve. Today, we talk about sustainable development. All right, this is a new word. Instead of socio-economic, but sustainable, which embedded socio-economic, but also long-term survivability for the next generation. So I would say that Islamic finance, when it comes to sustainable development, it's something not new, because sustainable development is embedded into the principle of Islamic Sharia, which is governing Islamic finance. What I'm trying to say is, I always said, since I've joined multilaterals, 27 years ago, I would say that when we talk about Islamic finance, I always let people know, if you can forget about the word Islamic finance, just talk about ethical finance, because Islamic finance is equal to ethical finance, right? So I want to mention about ethical finance, because what embedded in it is equity, fairness, and transparency, and what is good for the community. What is also, we mentioned what is, we are supposed to, not to harm the community, but to bring good for the community. So it's always about a win-win situation when it comes to Islamic finance. So I don't want to talk a lot about Islamic finance. It's a very huge subject matter. Let me go directly into a specific idea of trade, Islamic trade finance. That's what we do best in ITFC. During our own journey as a multilateral, specialized in trade finance, we've come across a lot about sustainability, how we can help, how we can guide the other institutions, leading other institutions in the Islamic finance world into adopting a principle of reducing gas emission or to bring out new technologies in order to reduce the carbon footprint and therefore involvement into carbon markets. So what we do is trade finance, which means that we have an impact on trade. We facilitate trade. So when we facilitate trade, we try to embed the good element in it. How? I'll tell you one thing. If we talk about world global trade, more than 70% of global trade is by seaborne shipping, seaborne trade, and value-wise more than 70%. So shipping is a very important, critical aspect when it comes to global cross-border trade. And if you take that into context now, shipping industry, if it is a country today, shipping industry would be the 6th largest polluter in the world. All right? So just imagine what the impact of, if you solve the problem of shipping, what type of technology they use to run the ship, right? You can help in reducing the carbon footprint. So now going back to trade finance. Trade finance is a facilitator, enablers. We need to, through trade finance, we put up, I would say, the principle to guide how the trade should be governed. We won't be able to tell people how they should ship their goods, but we can put element into our financing in order to be able to guide people of what type of trade we want to finance. We want to encourage to be financed, more like a green financing, all right? So Islamic finance, by its nature, has all this embedded in it, which means, I mean, I'll talk about, again, transparency. Transparency means we always look, when we do trade finance, we don't just dish out money and the other party, our borrower, just do the trade. No, we have a view on who his counterpart, who he's buying. We do the KYC, but KYCC also on the suppliers, on the client, etc. So Islamic finance has a duty, because Islamic finance, trade finance, I would say, Islamic finance is based on actual economic activity. We have to have a transaction going on so that we finance. When we do that, we have an idea who are we dealing with. What I'm trying to say also is, so we have a mandate through the role we can play is to contribute to reduce that carbon footprint or offset the carbon footprint by putting some covenant in place in our financing toward the customer. So I would say, for example, the transparency, I would say, again, back to the compliance, because we are moving into a world of transformation in trade. So when we look at it, we have a leverage on the counterpart that we're going to finance, what we expect them to do. For example, when they're buying petroleum product or gas, we have to make sure that the ship they use are using, for example, double hull, so that it does not lead to any pollution. We ensure that vessel has not so much years, are also taking place. So this is the type of check we do before we finance a transaction. And we want that to be more generalized, so that we force people to abide to best practices. So that's why, I mean, when we do Islamic finance, we can help to make that leverage on other people so that they can adopt the practices to bring in a reduction of carbon emission. Apart from technology that can come through project, but on the trade, we have a lot of leverage on our counterpart, not IETFC, but all the banks doing trade finance. Thank you.
Thank you, Nazim. I mean, that's really a very interesting approach and a very interesting look at the details and the intricacies of trade and how can that be looked at within the context of carbon emissions and carbon markets and climate. But let's take a different perspective on the same aspect. Here I would like to turn to Luma. I mean, from your perspective and from what you are seeing as a leading sustainability consulting firm, okay, how can Islamic finance be leveraged, I mean, to support ethical and responsible investments in the carbon markets?
Well, thank you very much for that. Very interesting, as you said, to bring together trade, how Islamic finance and trade can come together to bring about, in this particular case, improving carbon trading. From my perspective, I have two hats, if you like. I'm obviously, sustainable consultant. We work with organizations, but I also have a long legal background, and specifically in Islamic finance. So I bring a slightly different angle. I think how we keep asking everybody seems to know that ESG or SDGs and Islamic finance are compatible, but no one seems to put their hand on how exactly it works. And if I can step back a little bit, obviously Islam as a religion brings the typical ethical points of view, that are in a religion. Do not steal, do not lie, etc. All the let's say underlying topics. However, there are two, if you like, additional factors. One, with time, we have created this, what we call the negative sin list, to avoid in transactions. This is when we start looking at Islamic finance. And the that is one. And the other thing is that Islam itself has a body of contract law. And this is something that people don't quite see. Islam has types of contracts, ijara, leasing, sale, partnerships, etc. And so when this is why it becomes a topic when we're talking Islamic finance. And so each of these types of contracts, etc., have their terminology and have their terms and how it works. Now, in the past, when we used to structure Islamic finance, the only issue that we were looking at was primarily the relationship between the financier and the recipient of the money. So it was how we move the money forward, and then how do we take it back, of course, with an Islamic lens and the terminology. Now that ESG or SDGs have become let's say, the prominent party in the room, and we're allowed to talk more about ethics, the question is, what is Islamic finance in that context, and is it compatible? Of course, there is no question it's compatible, but why? With the concepts of, as we all know, maqasid al-sharia, where we have, when we talk about the five essences, protection of life, wealth, health, intellect, and religion, you have this overlay of all the advantages or all the things that Sharia seems to or seeks to implement. And SDGs are exactly what that is about. And so, to my mind, anything that you do that is Sharia compliant, by definition, is sustainable. Because of that, because of Sharia, how Sharia works. Of course, you can say that it's an overlay and it doesn't have teeth, if you like. But I would like to look at the SDGs maybe as the goals that lead, each is a specific goal that leads to that. And so you can immediately see how carbon credit and the purpose of why this industry has now flourished. It's for how we are improving lives, etc., and how we are going to reach our goals, our climate goals, and so on. You can immediately see how Islamic finance is contributing to that. Now, obviously, we have the structuring issues and stuff, and I think we're going to come back to that when we talk about challenges, but all I can say is that today, Islamic finance is automatically contributing to SDGs and to climate specifically and to carbon credit.
Thank you, Luma, for making that deep link, I would say. I mean, and going back to the roots of Islamic finance and the essence and the principles and linking that, I mean, with the current topic that we're having regarding climate change and carbon credits. Now, I would like to turn now to Professor Lisa Wilson. Thank you for flying all the way, I mean, to be here with us in Riyadh. It's an honor and a pleasure to have you. So we would like to take a different perspective and a different angle from your experience in the exchange-traded carbon credits, XTCC. So the question or the thought that we would like to explore with you is that can Islamic finance foster greater transparency and sustainability in carbon market transactions and projects, and how?
Yeah, it's a really good question, and again, thank you for having me. And for those that know, I think I'm probably one of the only Australians that I've heard here, but there's an interesting component. I am Australian, my professorship's from Africa, and I live in France, so there you go. But I also think that Islamic finance is actually, at a very broad level, is driving the economy towards more a socially responsible investment and sustainability investment and ethical finance. So I think at a very broad level, the principles of Islamic finance are driving the economy in a very different way. Our company is one that is very few in the world who do both Sharia-compliant products and conventional products. And so I just want to take you on a journey probably through 4 areas: investment, projects, technology, and circularity. And I think one thing that's often missed in this conversation is technology. Because one of the challenges that we have is many of the projects that we are looking at to capture carbon credits are quite analogue. So underpinning all of what we're doing, there is still a conversation that's required around the technology that will drive transparency and support the principles of Islamic finance. And of course, that is blockchain, AI, IoT, and data. So I think there's another conversation quite separately around technology. But in terms of the investment side of things, the Islamic principles obviously prohibit speculation and excessive risk. Now, one of the things that we've been talking about at XTC, which is the world's first exchange-traded structured financial product, is that we want to bring traditional capital markets to a new asset class, which hasn't been able to be done before. So the very large majority of liquidity is still coming from a traditional capital market. How can we translate the Islamic finance principles into the way that we structure these financial products to obviously meet the requirements of reducing risk and prohibiting some of the challenges that we've had over the last few years? So in terms of investment, the Islamic banks and financial institutions are more than a financial system. They're driving a value-based system. And that's really what we're talking about when we're talking about carbon credits and climate change. So they're not just a financial institution. We know that if we implement those financial principles, that we're getting high integrity carbon credits. And I actually love that term rather than high quality, because I think there's 2 different things. High quality can be one thing, but they can also have integrity. So I think there's a dual combination there. But I think the higher the demand for higher integrity carbon credits, the higher the demand and the higher price. That attracts traditional capital markets. They're there wanting to add liquidity and make money from something that's an ethical investment. So I think those principles translate very well. At a project level, and I think that's another really important conversation around the world, because yes, the very large majority of our renewable projects are coming from the global south. So there we also have challenges often around governance. They are small businesses. They tend to be seen by investors as high risk. If we can de-risk that space by having greater governance and control by using the Islamic principles over monies that they might receive, we get greater confidence in the market. We also get greater governance and better use of the funds in the projects, so we can actually redevelop and continue to develop those projects. I mean, we've got principles of SUKAK and some of the Sharia compliance products that are out there that we use. That drives accountability through everything we do, even in producing our products. But that translates back to the actual projects that we want to engage with. It's not just the output of those projects, it's the actual way those projects are governed. Because our investors from the traditional market want to see end-to-end transparency. They want to see from the very time that the projects are developed, obviously permanence in the types of renewable energies, but of course also in permanence of the businesses themselves. That gives our investors confidence. So in terms of the last one, which I'm going to talk about again, is technology. If we want to talk about that, our investors are saying, how can you prove it? We can say all the integrity issues of Islamic finance. We can overlay them in what we want to do, but they want proof, categorical proof. Obviously, technologies like blockchain are the one that is going to do that. But we're 23 years into the 21st century, and we're still saying to people, do you understand blockchain? And they don't. So everybody in this room should understand when we say we've got end-to-end provenance, what does that mean? It means transparency. It is the technology that underpins Islamic finance principles. So I think there's a huge alignment here between not just Islamic finance principles, but all the stakeholders and the elements in the production to the point where we get the carbon credits to market.
Thank you, Professor Lisa. In fact, I wrote it down here. I mean, high integrity carbon credits versus high quality carbon credits. I mean, that's a very interesting and very tricky term to use. I mean, linking high integrity carbon credits with the way they are really developed and the how and everything. So, and it means that you have whoever is issuing those credits actually went to the nitty-gritty details of understanding the mechanism behind them. So we learn a new term every day. I mean, that's something new for me. So discussion, can go on and on, but I would like now to go back to Nazim. So ITFC worked with the VCM to issue the first ever Sharia resolution to allow trading of carbon credits under murabaha or using murabaha. So how can Islamic trade finance and the trading of carbon credits can be combined for the benefit of the member countries of the ITFC?
Thank you, Nasser. I just mentioned, you just mentioned that ITFC collaborated with the regional voluntary carbon market company, and in 2022, ITFC managed to issue by its Sharia board the first resolution allowing trading and financing of carbon credit for the purpose of offsetting greenhouse gas emission. And it is a noticeable effort toward addressing this climate change challenges that we're having and supporting sustainability. Now, the idea that we have been leading the front on how now we can finance carbon credit. Now it is opened the door for a huge market in the Islamic world that can allow to build on carbon credit. We finance linking carbon credit with a commodity to be financed to mitigate emission during shipment. So this is one aspect. So the idea now, what next? So now we need to bring all the Islamic finance institutions into the same arena. So we can now bring them to participate in carbon credit project by financing the emission reduction project in industries like renewable energies, afforestation, and also in carbon capture and storage in place. This project can generate carbon credits that can be traded at the same time in carbon markets, as well as make a meaningful contribution to global effort to mitigate climate change. I mean, this alignment of finance, Islamic finance, with environmental responsibility is crucial in addressing the problem, the pressing challenges of climate change. Now, what next is we need to come with innovative Islamic finance solution structures in place to how to link the financing product and the financing of the carbon credit. Yes. And that's where we have to work more now to contribute with other financial institutions to bring this type of solution for the market in the future. So this integration of finance and environmental responsibility, I think, can contribute greatly to the broader global effort to address climate change and promote a more and just sustainable future. Thank you.
Thank you, Nazim. I think key point that you mentioned is to bring other financial institutions along, specifically, I mean, since ITFC is an Islamic institution, to bring other Islamic financial institutions along, because I believe we all, I mean, if there is one thing that we learned from the work of international development is that no one institution can do it alone. So, absolutely. So, but again, it's not always a rosy picture, okay? So, Luma, a challenging question, okay? So, what challenges does Islamic finance, I mean, there are obviously opportunities, but definitely there are challenges and risks. So what challenges exist in front of Islamic finance in this area?
I think we've already heard a couple of things from both speakers. I think from an Islamic finance perspective, when we're thinking specifically about carbon, we've now ticked the box on its compliant, the purpose, etc., all of that, and the sin list, etc. And so when we're looking at how we can then work with Islamic finance to create carbon trading or credit, the typical issues are, I would say, if you remember that it's also a legal system, just like any other legal system, it's the same type of topics. So what kind of asset it is, what are we talking about, is it a commodity, is it a right, and then each one of those has a different way of being structured and being financed and so on, what type of contract works for it. But in a way, those are the type of things that we are struggling with in the carbon market generally today. And we know that there are a lot of organizations already today, we were actually having this discussion a little bit before, that are working on trying to figure out some of these things. Nevertheless, I mean, you know, ITFC and RVCMC have already started the work, and we are already seeing some trades, but to take it to the next level, there is going to be, we will need a lot more information, a lot more, let's say, understanding of the underlying, how it's going to actually work for everybody, and then we can build on it to structure, if you like, or use it more in Islamic finance. Uncertainty, the transparency, high quality, all of those things are similar topics in an Islamic finance context. So nevertheless, we can also talk about how we can use carbon perhaps in, you know, when we talk about opportunities, how we can use it today as for example, Apicorp just did a transaction recently where it's structured to promote carbon emissions and so on. So in a way, it's not yet clear in the market generally, and we have a lot of work to do, if you like, in order for the market, in order for them to build on it on top of Islamic finance, to move it to the next level.
Okay. Thank you, Loma. Now, moving to Professor Lisa again, how do you see, I mean, the collaboration efforts, or what can stakeholders from both angles, whether from the Islamic financial institutions and carbon market stakeholders, how can both of them collaborate to accelerate the transition to a low carbon economy?
I think this, I'm going to, again, I like to break these questions up a little bit, but I think one of the challenges that we have when we talk collaboration is a lot of people just do a lot of talking. So they actually talk about what they can do rather than act on what they can do. So one thing I'm really proud of with exchange-traded carbon credits, one, we are the world's first in doing what we've done, but we've brought it around and brought it about and brought it to market through collaboration. We talk about end-to-end, if you like, provenance. We had to look at what our market was and how and who and how we could collaborate with to make that happen. And I think, so we've gone from, looked at right from the project stage, right to the delivery, to the market stage, who we needed to talk to bring that product, to market. And I think that I'm actually going to raise a point that Mariam spoke about before, because not only do we have to think about it, we need to act and do on something. So something Mariam mentioned before was actually, how do we make carbon credits an export? Well, that's really what we decided to do with XTCC, except not actually think about the actual credit as an export. What about if we use existing systems and turn it into a financial product that can already be exported using exchange trades and stock exchanges that exist? So I think part of the challenge that we have is that we don't always have to reinvent the wheel. We can use existing parts of the economy, and what I would say, and I use the term hybridisation, we can connect the new digital world of digital assets such as carbon credits and connect it to the existing traditional world of capital markets, and we can then overlay the Islamic finance principles of that. We can actually just sit together and work out, well, what if we think about this differently, what can we do? I'm on the legal counsel for the Centre for Digital Trade and Innovation. One of the challenges we still face is getting finance and venture capital to SMEs. If we look about this market and say, if we can get liquidity into the market, those SMEs don't actually have to go out and sell half their soul to get venture capital to develop their businesses. We can democratise the market. So it's a different way of thinking about a market by using the existing elements that exist. And we can do it if we want to act on it.
Yes, absolutely. We can do it. And I see Trevor pacing and the team signaling to me. So we are out of time. Unfortunately, we will not have time to take any questions, but the distinguished panelists are with us. They will be available and will be happy to take your questions. So thank you all for attending. Please, let's have a round of applause for our esteemed panelists. Thank you very much. Back to you, Trevor.
Thank you. Thank you very much, Nasir. A round of applause for the panelists and Nasir as well for that engaging session. One more. Thank you very, very much. So we've covered quite interesting topics so far. Impact of Islamic finance on carbon markets, impact of carbon projects in the global south, breathing life into carbon credits through market mechanisms. We're getting particular questions around the quality of carbon credits. So if you allow me, for the next 15 minutes, let's have a quick Q&A session between Gauri Johar, she was here earlier on, Executive Director, Energy Transitions and Clean Technology Consulting, S&P Global Commodity Insights, and Marco Arcelli, CEO, ACWA Power. Just 15 minutes, and then we'll allow you to break for lunch.
Thank you, Trevor, for the marching orders. So since this is the session between yourselves, us, and lunch, we'll keep this swift, but we will ask a key project developer. Welcome Marco Arcelli here to FII and to this panel on understanding projects more. Now, you do a whole range of desalination, renewable energy, and are a key player in the utilities and water space, energy and water, which is an interesting nexus. So tell us more about what is the carbon credit related market you are helping to develop in the global south?
Yeah. So there are two types of markets for carbon emissions. There's mandatory markets and voluntary markets. And I think that goes along the big divide between the global north and the global south. Global north is not really growing, so you're talking about replacing or substituting a capacity. How to drive it, because you could simply stand still. You need something that is mandatory, that typically costs a lot of money also for the end consumer. What you should do instead in the global south, because it's a growing and emerging demand, so you need to build a new capacity, not replace it. And of course, the economic means of the final consumer are less. You need to do something that can help the development and can really support, both on the development side and then the final use, the decarbonization. That is where I think that a voluntary market can play a great role. The price tends to be much lower. So you're looking at $4, $5, $6, $7 instead of the $70, $80, $90. And I think that that is the experience that we have, particularly with the RVCMC of Riyadh that we heard earlier. They're doing an excellent job in collecting all these potential offer and the potential demand. A lot of the buyers are from Saudi, from the Gulf countries. So I think that this region can really be a big catalyst of this movement that can help also support financially the projects.
Great. So I think you mentioned a very important difference between these two types of markets that are there and how it is probably easier to play in the voluntary market. But that with itself brings the challenge of the quality, the trust, and these were issues we've been discussing since the morning. So what are some of the biggest challenges you have faced in being that project developer?
I think there are two. So one for the developer and the second is for the buyers. For the developers, as you say, is the complication of the certification process because, of course, you're selling something. Somebody's going to give you money for it, so you want to make sure that you have something that is of a value. That process, and I've seen it from the time of CDM 20, 25 years ago, it's very difficult because what is the baseline? What is the offset that you're going to do? And so that is cumbersome and sometimes kind of makes some of the project developer to simply say, well, it's too much for the little value that it adds in a voluntary market, so why should I do it? So that process is something where we need really to leverage on the strong, the solid players who can kind of come with a standardized process and help the system, let me say. The other is really, I think, even more important. So as a buyer, why should I buy something that is really voluntary? What use can I make of it? And I think that there the global integration between different jurisdictions can help. So European Union is going to put CBAM basically because we say, well, I think the bottom line is we're tired of paying for this big, nice drive that we're giving, to the world to decarbonize. Now it's time for everybody to pay. We're buying from you, so it's like we're exporting CO2 emissions if you put, manufacturing production elsewhere. So what you're saying is, well, if you want to import into Europe, you have this kind of CBAM, carbon border adjustment mechanism. So I think that the big aspiration that we should have is how do you combine a mandatory prescription that will be in CBAM with what you do on the voluntary market. So if you could use what you're buying on the voluntary market and say, well, I paid a part of that already, or maybe it will be the full value, and I can use it to offset, I think this will be a big incentive for the buyer to say, well, that's a great idea, let's put them together.
Right. And do you see this sort of difference between the voluntary and the mandatory markets lessen over time? Do you feel that, or this difference is going to widen?
I think it's like the COP. You have hundreds of people from the public sector, from different countries, from the private sector. It's very difficult to bring everybody together and find definitions, because we're talking about definitions
right,
that are good and common for everybody. So over time it will happen. It's a natural process. I cannot see that it's not going to happen. How quickly can that happen? It depends really on the goodwill and the amount of work that we all put together.
Right. Another trend in this carbon credits, especially originating in the global south, we're beginning to see some level of nationalism, which is that, I'm not going to be exporting as a country to meet my NDC targets certain amount of carbon credits. Are you beginning to see more of that, and where do you feel this could go?
In the countries where we operate, not really. So
okay.
I think at the end of the day, the point is the voluntary market today is kind of like the icing on the cake. You're doing a project, you have demand that is growing, renewables is the cheapest, the fastest, the most secure, because you don't have to import any fossil fuel, any fuel to run your plants. So those are going ahead by themselves. Sometimes you need these as an adder to make the project more attractive for the developer or to achieve a better tariff for the country. So yes, that is something that we see.
Okay. And, it was interesting to see, you have a huge, broad portfolio, and then there are certain activities which get called out a little more. And I saw that, I think you've been involved with the EBRD in terms of making their annual meetings carbon neutral. What does that process look like for others maybe who want to do that as well?
So these are the small initiatives that you do here really to jumpstart the industry, to make it more visible and to make people aware of how important it is, but also how we can contribute, easily into that. I think what we're doing now is really to put all our efforts on the RVCMC, because I think at the end of the day, what's important is to create a few platforms, ideally one or two, that are liquid enough where we can all come as buyers and suppliers, basically to make it happen. On our side, we have until last year basically 3 million megawatt hour of green production. It will be 27 million pretty soon. So you see that the ramp up of our capacity is very quick, very large. If we can push it on a platform, I think that we can be a substantial contributor to making people aware, people be ready to purchase, and people contributing to decarbonizing overall.
And this platform would enable people to have those options to come to you and make their activities carbon neutral. Is that right?
Yes.
Okay.
So the ideal is you come in, you create the need, you create the platform. The next step is I link it to what is mandatory afterwards, and then we have put the work together.
Wow. Well, that's a great example to go back to and see how many entities could work with you. I'm very tempted to ask you about your initiative on net zero. What is that about? How does it link to aqua power?
Yeah. So net zero is a target that we gave ourselves by 2050. It's actually part of more broadly Vision 2030. We're a Saudi company operating in many countries. We're an enabler of decarbonization everywhere. So I think that simply our business model, that we use project financing, we bring equity partners. That means that for every dollar that we personally invest, we mobilize 10. I think that's the biggest thing, biggest contribution that we can make to a net zero globally, so not just in Saudi Arabia, but elsewhere. We're doing a number of things. So we're investing in renewable projects. We're converting projects. So in the Emirates, we had a coal plant that we were building, and then together with the local government, we say, why don't we switch and we make it gas-fired? And that's what we did, the ASEAN power plant. In Saudi Arabia, we're converting, again, with the local authorities, a desalination plant that was the old thermal technology. We're going to use now reverse osmosis, that is electricity powered. A lot of that is from renewable energy. So all that together, 22 million barrels per year of reduction. We're developing Red Sea Global, all the utilities there. We have the first guests, and John Pagano was talking here. It's a magnificent example of, totally off-grid, totally sustainable, solar power, biofuel backup, and battery storage to be safe on the 24 hours. I think that is another example that goes together also with circular economy. So to give you an example, the wastewater that we take from the resorts is going to go through some pools where it's going to leave all the nutrients to create mangrove fields, mangrove wetlands. The water that comes out of that goes to the nurseries where the plants that are going to be used for the landscaping of the resources are being produced. So this is part also, by the way, of the Saudi Green Initiative that to me is phenomenal. To plant 10 billion trees in the desert. That's a great initiative, I think, and it's part of all these big initiative in Saudi Arabia to decarbonize by 278 million tons. It's amazing what the country is doing.
I mean, that's a huge, again, spectrum, and I think what's interesting is you're talking about also greening the desalination value chain and linking it to a circular economy concept, which is fascinating.
Yes. Yeah. In desalination, you see, we are the largest private developer in the world. Today we have a capacity of about 7.6 million cubic meter per day. That's, to put it in context, is about 20 to 30% of the demand in the 4 countries where we operate, which are Saudi Arabia, the Emirates, Oman, and Bahrain. We plan to increase that significantly. What people don't know a lot of people in the industry don't know is that everybody talks about the gain in efficiency in renewables over the past 15, 20 years. Well, we've done the same in desalination. We brought down the specific consumption, that is the amount of energy that goes into producing 1 cubic meter of desalinated water, by more than 80% in the past 15 years. So that's not only cheaper now to make it, but it's also much more environmentally friendly. So after making it cheaper, the next stage is really how can we further greenify this? And we have two examples. So of course, Red Sea Global, where we produce about 35 to 50,000 cubic meter per day of desalinated water, that's 100% renewable. Similar project in the Emirates, the Hasian IWP that we launched recently. We signed the PPA recently. That is, let me say, physically disconnected. So we have the power plant, the water desalination plant here, and the power generation fully renewable in a different location, but everything is fully connected. So that's like 100% renewable. In different projects, what we have done, like Tawila in the Emirates, Jazla here in Saudi Arabia, about 20 to 30% is solar panels directly at the plant, so that you don't have all the losses in the transmission, and basically reduces the environmental footprint.
Wow. Well, that's, again, a lot of interconnections between these two value chains. I'd love to have the audience ask one question. We have time with 2 minutes. So if anyone would like to ask a question. Atul.
This is fabulous conversation, so much packed in such a short time. My question to you is, there are a lot of issues around transparency and all of that. What is your biggest worry as you expand your business? If I heard the numbers correctly, 9 times your growth. So what do you think?
So yes, our plan is to ideally triple the size of the company. So the 9 is 1 we invest and 10 we mobilize between everything else. I think that the opportunities are there. I think that what we are working on right now very closely is the whole supply chain, because of course, and when I say supply chain, it's financing, it's EPC, suppliers, potentially partners also. So the fact is, higher interest rate, inflation, so the cost has bottomed out. So we see that the price of renewable will be higher. So what we want to make sure is that this does not impact the speed of adoption of renewables, and we don't see it slowing down because it's really a very deep market. What we need to focus on really is how to remain competitive, but not just against others, but competitive on behalf of the final consumer, basically, how to make sure that we can take money out. We're working more strategically. Today we're signing one agreement with a large private equity, basically to make these more structural so that we can be faster. Faster speed is efficiency. At the end, reduce cost and make it available for consumer. We're doing in parallel framework agreement with supplier. We just announced one on solar power for 3.8 gigawatt of capacity. So putting all this together is, I think, what will help to keep the prices down as much as possible.
Wonderful. So thank you so much. This was a lot to take in and a lot to come back to you with for ways to interact with Aqua Power. A round of applause for Marco Arcelli here. Thank you so much. And we're over to lunch.
Thank you very much. Yes, we may break for lunch. Kindly be back by 1:45. We'll be very strict on time because I know there are some of you have to catch flights. So 1:45, we'll be back here for the final session, all right? Thank you very much. Enjoy your lunch.